Welcome everybody to Volatility Trading Strategies. So my name's Brent Osachoff and I founded VTS all the way back in January 2012. And if you're watching this video, it likely means that you're currently disappointed with your investing results. The truth is, the vast majority of investors out there pay way too much money to advisors in fees or to the army of trading guru frauds out there on social media, but they get way too little as far as performance goes on the other side. It's always my top priority to actually flip that equation and give people a higher rate of return with lower fees and then let that compound over multiple years. Our diversified portfolio has been live now since 2012 and it will put you on the right path. We've got a large community of investors from over 70 countries around the world. Today, I'm going to introduce my total portfolio solution, which I'm confident in saying is the best investing solution available anywhere. And this is also the start of a full course revealing everything from the strategies to performance, trade frequency, correlations, risk management techniques, and many more lessons. When you join VTS, there is a constant stream of education and you'll get access to all of it. So the VTS total portfolio is currently 3 independent strategies with an equal allocation to each. Now, what I mean by independent is I don't take any positions in one of them based on anything else that's going on in the others. That's a key factor to my long-term success. Each individual strategy has its own level of risk management built right into the strategy, and on its own, it crushes its benchmark. And then when you combine 3 independent strategies that all have that characteristic, using different asset classes with different correlations and market biases, you end up with a diversified portfolio that also crushes its benchmark. How could it not? So let's start with the one that probably gets the most attention, and that is our tactical volatility strategy. Since I was one of the early pioneers of the short vol trade, so to speak, we could classify this as our flagship strategy. This is a chart of the VXX, the first volatility exchange traded product that launched in 2009. I've been trading this since the beginning, over 15 years now. And of course, it doesn't take a genius to see that it goes down over time, right? Seems like a pretty good idea to short this thing and make a bunch of money. The problem is it does occasionally spike up very violently and it can easily blow up a trader's account. We need a more sophisticated way to trade these things, otherwise you'll just make a bunch of money in good times and then you'll give it all back in bad times. So I use my proprietary volatility metrics to divide the market up into 3 distinct volatility environments. The low to mid range, where we will be shorting volatility and making the bulk of our profit. Then in an elevated risk range where there's no clear trend in the market, we'll hold our safety position of gold. And then extreme readings, which is one of the rare times we will go long volatility so we can profit from major market crashes. As a result of this volatility targeting, like I said, risk management is taken care of because we cycle out of aggressive positions at the first sign of trouble. And performance-wise, this strategy puts all the benchmarks to shame. There's also a full course breaking down all the key factors of this exciting short volatility trade. Our second strategy in the total portfolio solution is called defensive rotation, and it takes advantage of the fact that many of the world's top performing stocks are tech related. This is also a volatility targeting strategy, but using different asset classes than our other strategies, as well as a different set of volatility metrics to divide up those ranges. The first range during lower volatility is for riding that NASDAQ index during its best periods. But not only just the NASDAQ, we actually use the 2 times leveraged version called QLD. Then our ambiguous middle ground environment is for utilities, which do perform much better than stocks when there's no clear trend in the underlying market. And then on the high end for safety, we shift entirely into cash and watch all the major market crashes safely from the sidelines. Performance-wise, defensive rotation has been crushing it for years. The underlying NASDAQ has done well, but because we're also able to sidestep some of the trouble along the way with utilities and cash, the negative drag is reduced and it adds a ton of value to our overall portfolio. And then the third strategy within our total portfolio solution is called strategic tail risk, and this one serves 2 purposes. First, we have another 3 volatility ranges to add an even wider variety of asset classes to the ones we already use in the other strategies. During mid to low volatility, the S&P 500 is our main aggressive asset of choice. But when volatility is elevated and risk is rising, we move to safety. Now, in the past, we've used real estate, bonds, cash. We could use a high-yield dividend ETF or low volatility S&P. It depends on the market environment, but it's all about adding diversification and reducing correlations. And then importantly, and this is where the name of the strategy comes in, during extreme volatility periods, we move into our tail risk protection ETF called Chaos for when the market inevitably crashes. Because the thing is, everybody already knows the market is eventually going to crash. It's happened before and it will definitely happen again. But nobody knows when it's going to crash. Now, you could follow somebody who has an overall bearish view of the market. You know the ones, they're always pointing out the negatives, they're taking counter-trend positions, they're constantly talking about the house of cards is eventually going to come crashing down. But that leads to garbage performance because the truth is, most of the time, the stock market is just trending higher, even if you think there's many reasons why it shouldn't be. What you need are systems in place that can profit when the market is doing well, but then also shift into tail risk positions to profit from the inevitable market crash, but only when you need it. Our strategies are nimble and they can shift out of the aggressive positions and into safety positions on a single day notice when necessary. You'll be amazed how much better your investing results get when you start matching your current positions to the current market environment. This is the heart of the VTS Total Portfolio Solution. Tactical rotation through volatility targeting. There's no better way to invest. Now, I do want to mention quickly here, we do have another strategy that you'll see in your daily trade signals email when you join VTS, and that's our Bitcoin Breakpoint strategy. Now, given the nature of Bitcoin, some people love it, some people don't want any part of it. This strategy is entirely optional, and it's not included in any of our official performance. If you love crypto, then I do think it's the best way to profit from Bitcoin and still control the risk. But you can also just skip it. Our official portfolio performance that you see on the website is the live trading results of our 3 main tactical strategies going back to inception. So what you're going to do now is go to my website or click the link in the description down below and claim your free trial to VTS. You'll see all of our daily trades, you can check out our volatility dashboard and learn about those important volatility metrics, and you'll have full access to our growing list of courses. Give it a few months, my VTS portfolio may just change the course of your investing future. So now you can either go to the next level of education and learn how those volatility ETFs actually function based on the VIX futures, or you can check out this video where I explain how I personally use the volatility products to make over 30% a year with tactical rotation. See you in the next video.